Welcome to Friday's Financial Fitness. Last week I had mentioned to you that in the first quarter of 2018, the S&P 500 companies had an all-time high of stock buybacks in their company. Today I want to explain how these buybacks can impact the overall financial health of the company. So I want to give you an example. And let's first walk through the example of what we refer to as the earnings per share. So let's assume that a company has a profit of $720 million. Let's also assume that they have a total of 400 million shares outstanding that the overall consumer or investor can buy. And then let's assume in this example that the price of the stock is at $30 per share. In this example, how we first figure out the earnings per share is we take the overall profit of $720 million and simply divide that by the number of shares outstanding, which is 400 million, and we come up with this concept or this phrase of $1.80 in earnings per share. Now I would like to walk through an example of what happens when they reduce the number of shares outstanding when they actually go in and buy shares of their stock. Let's assume over the course of the years, they've had a total of $900 million that they would like to use to purchase their stock back. And if you recall, the stock was trading at $30 per share. So assuming all things are equal, if the stock is at 30 and they have $900 million to buy that stock, they would actually purchase 30 million shares. Therefore, if you remember, they originally had 400 million shares. They've now taken 30 million shares out. So if we subtract that 30 million, the total number of shares outstanding are now 370 million shares. Here's where the magic is. If you recall, they had a total profit of $720 million. And if you recall from earlier in the video, if we take the 720 million, divide that by the 400 million shares outstanding, their earnings per share were $1.80. Now, we still have the same $720 million in profit, but instead of dividing it by the 400 million shares outstanding, we actually divide it by 370 million shares. And when we do the math, their earnings per share now is $1.95 per share compared to the $1.80 per share, even though their total profit remains the same. And the difference between the $1.95 and the $1.80 is an increase of 8%. So now you can see why, when companies buy their stock back, it's attractive to the overall earnings per share.